Welcome back to my channel. I'm the cover call guy, and my goal is to create a $120,000 per year passive income portfolio. My portfolio currently yields $70,000 a year and about $6,000 a month. I'll be doing this using only cover call ETFs. Legal disclaimer before we start. This content is for informational and educational purposes only and is not financial advice. I am not a licensed financial advisor or tax professional. All opinions are my own and may be incorrect. Trading and investing involve risks, including loss of principal. Please always do your own research. Consult a licensed professional before making any financial decisions. I am just some random idiot you found online, and I could be completely wrong. Okay, with that out the way, today's video is going to be on my favorite weekly ETF, Maggie. I think I've done 2 videos on this already, but I think I have to do an update on why I think it is the best weekly income ETF pair from Roundhill. It is an absolute monster, and I think this is good. I think Maggie is at least top 3 weekly pair. If not top 1. Again, different criterias. Again, this is the tech, so I just held it against other tech ETFs. That's what made my list and say is the income beast. I would put it against other ETFs, but again, they hold different holdings, so it would be a little unfair. But let me get started on today's video on why Maggie is the best. All right, the base thesis, this is my base thesis in 3 numbers, right? Total return since inception, almost 30%. Dividend yield of almost 20%. However, they aim for a 36%. So we'll see how they perform. It hasn't been a year yet. And they pay 52 payments per year. It's a weekly distribution. I believe they do an X day on a Friday and they pay on a Monday. So yeah. I have about 40,000, 45,000 in this ETF. I've been slowly building it. I've been loving it so far. It's going to be at least a $150,000 to $175,000 position. So I am very excited to see how this goes. Yeah, it's been doing well so far. The ups and the downs, and it has recovered nicely. Defining the true peer group. So diversified Mag 7, right? The core competitors for Maggie is YMAG, offering diversified weekly income from the Mag 7 basket. The single stock synthetics, high risk, high yield funds like TSLY and NVDY, tracking single stocks with synthetic derivatives. Leverage weeklies such as NVDY, TSLY, and index based zero date time expiry such as QDTE and XDTE. All right, the great confounding variable, right? This is just a chart of how it stacked up since its other peers has launched. Other peers launched like YMAG February 24th, QDTE March 24th, or active and exposed to the market. Remember the tariff liberation day crash? On April 2nd to 10th, YMAG hits a it gets hit with a 25% almost 20% negative drawdown, while QDTE hits with a almost 23% drawdown. Maggie launches April 23rd, so it launches at the market bottom, avoiding the entire crash. That may be a good thing, that may be a bad thing. However, so far, Maggie has been able to recover from a lot of these serious dips. My beast quadrant, right? Risk versus return year to date, superiority in plain sight, right? Using year to date data, which includes crash repairs, Maggie is in the league of its own, right? It's delivered the highest return plus almost positive 23% of any diversified fund, and had the lowest drawdown of just 4%. Something light, easy pocket change, dollar cost average, right? Pairs like YMAG and QDTE had the worst year-to-date returns and catastrophic negative 20 to 25% drawdowns. And NVDY kept pace on return, but at the 10x the risk. As you can see here, the high return, low risk is Maggie. It is the only one in that section. High return, high risk was NVDY, QDTE, YMAG, and then low return, high risk, TSLY, and Misty. And then low return, low risk, we don't give a damn about that. It's growth stocks. I just put in there growth stock. I don't care about that. I just left that blank. I don't care. I don't think you either. So I left it blank. All right, performance fact check year to date, the misleading view, right? Since year to date 2025, data is analytically unsound. Just means that it includes the April crash repairs, but not for Maggie. Even so, Maggie leads all diversified funds. It's just the counter argument for those who's going to be like, well, it did it after the crash. So Maggie is still on top of its game. And then another performance fact check, normalized the true view, right? On a normalized basis since inception, YMAG and QDTE capture more of the recovery. This shows Maggie's trade-off. Its safer structure may lag and appear bull run, right? It is a rock, it is a foundation. However, it's not going to go ahead and be in the high risk, high reward like these two are. It's more of a stable, right? It's reliable, it's stable, and that's what makes it an absolute monster. It is very, very consistent. It doesn't care what the market does. It's consistent all round. Income yield versus stability. Peers boast a 50 to 100% plus yield, but this often comes with severe NAV erosion. Right, Maggie's 18.16 yield provide a powerful, more sustainable income stream. It doesn't matter how high the yield is. If it's not sustainable, if it's not consistent, if you are losing all of your capital appreciation, NAV erosion, what is the point? It makes zero sense. You are literally burning money. Right, the how, strategy, mechanics, Maggie versus YMAG. These are just two examples. Maggie uses a traditional, right? It employs the simplest, most transparent cover call structure. It buys and holds the underlying assets, which is MAG's ETF, sells call option against the asset it owns. Very straightforward, one-on-one downside exposure, like the stock, and upside capped by the call strike, obviously. It's a weekly. Versus YMAG, it's synthetic, right? In my opinion, it's a very complex funds of fund structure with multiple risk layer. Right? I put a nuclear icon because it can pop off anytime. Right? Does not own stocks, holds synthetic derivatives plus cash, buys 7 other synthetic yield max ETFs. The risk is compounded, inherits NAV erosion risk from all 7 funds plus a layering fee. The only one that gets away with this is the fund managers. Right? Anybody who bought the yield max ETF have bought the fund managers a brand new beach house in Miami. The Achilles heels of a synthetic yield. We're gonna go into the return of capital trap, right? Synthetic funds like YMAG warns of NAV erosion risk. They fund ultra high yield with return on capital, which is just giving their investors their own money back. Yes, it is a taxed accounting type of way of making sure you don't get your money back. I mean, you don't pay taxes on it for that current year. This is mechanically reduces the NAV because of such a crazy yield and not enough profits. This create a death spiral and a flat or down market as the asset base shrinks. Maggie's yield is far more sustainable, right? We are looking, when I buy this, my criteria is how is it 1 year from now, 5 years from now, 10, 15, 20, 25, 30 years from now. We'll get into the next chart. And that's why I pick Maggie. This is why I picked Maggie. Maggie's strategy is structurally superior. It's 100% exposure to the Mag 7, perfectly balanced at 14.29% each. The combined capitalization of the Mag 7 stock was approximately 20 trillion as of November 2025. Now you tell me, would 20 trillion just get wiped off? I'm pretty sure it's here to stay. If not, it's only going to get bigger by 2030, 2035, 2040, 2050, 2060. I could be wrong, but I think it has a higher chance of doubling or tripling than it has a higher chance of going to zero. unless nukes go off, then yeah, it will probably go to zero. But then at that point, who cares about money? I'm not looking forward to getting paid. I'm just trying to survive my next meal at that point, right? Or not get radiation poisoning. But I digress. All right. How does it generate weekly income? It's very simple, traditional cover call ETF. So it just buys and holds the Mag 7 stocks that you see, all 7 right here. Sells weekly call covers on them, collects the premium, and then pays it to you. That's it. Easy day. It's my set and forget weekly cover call ETF. It has paid me every day on a Monday, so I wake up to a nice Monday after the weekends, hits the bank account. That's it. Very stress free. Why Maggie is the beast, right? Superior risk management. This is my key. This is why I hold it, right? A tiny negative 4% drawdown. Competitors like YMAG, NVDY, TSLY suffered negative 25 to 50 drawdowns, wiping out your capital. Maggie protects investors, right? It's a rock. It's a good solid foundation as of now. It's been showing very good progress. Even with the drawdowns, has been able to recover. It has top tier year-to-date return with a plus 23 year-to-date return. Maggie beats its main diversified competitors, YMAG, QDTY, in the real world. Right, we're looking at actual evidence. Right, 2025 performance, which includes the crash, peer and diversified quality. Right, no leverage, no complex synthetics, no single stock gambles, just 100% equal weight exposure to the world's most dominant companies. Remember, combined 7 companies, 20 trillion. Literally, these countries are worth more than all of every other country besides the United States and China. Think about it. It's insane. And you don't want to hold it and get paid every Monday? I don't know. Maybe you don't like money. For those who think I'm a yield max hater, maybe you don't like money. Why Maggie is the beast. Weekly income, like I said, right? It pays 52 weekly installments every Monday. Perfect launch timing. I think it avoided a crash. Even if it didn't avoid the crash, I think I would have bought at the market low. Some see as good, some see as bad. All right, it's for me. I'm pretty neutral, but I just add it in there. It's innovative and accessible as the first Mag 7 cover call ETF. It provides access to professional option strategy in a simple, low cost. I mean, yes, I put low cost because it is pretty. 0.99 is not low cost. However, there are some that are much higher for what you could bargain for. All right, no options account needed. Maggie versus the true peer group. I just listed all of it. These are the tech focused cover calls that Maggie is pretty much considered its peer, right? Listing of all competitors from the deep research that I've made, dominated by Maggie's superior risk adjusted returns and structural integrity. It dominated YMAG, TSLY, NVIDIA, Misty, Apple, Amazon, Facebook, Google, QDTE, XDDTE, QDTY, SDTY, and then the leveraged of NVDY, TSLY, and AMZW. So yeah, Maggie is just an absolute monster. All right, it has also the optimal risk reward, right? Maggie isn't just the highest return beast, it is the structurally superior choice. It's the premier diversified option for investors who prioritize capital preservation and sustainable weekly income from the Mag 7. It would be insane. It would be insane not to get a piece of the Mag 7 with a total market share and market worth of 20 trillion. As it's only going to get bigger, in my opinion, it's only going to get bigger. I mean, these companies are really just, once the what is it, the foundation, or what is it called, when you build out the what is it, the call centers, and what is it, electrical grid for these AIs. Oh my god, it's going to boom, it's going to explode. right? Or maybe they go nuclear plant to power these the the next tech growth, or the next tech um what is it, innovation leap. Man, it's going to just boom, and I want a piece of it. I mean, I'm trying to build this position out to as quickly as possible to at least $150,000. Yeah, this is going to be my turbo. This is my turbo ETF that is going to supercharge my yield and my payouts. So once I completely build out my Maggie ETF, the portion of it, I will probably look to another turbo ETF that has at least 20 to 30% yield. So stay tuned for that. Subscribe, comment, like. Thank you for watching this deep dive analysis. Again, this presentation is for informational purposes and only purpose only, and not for investment advice. I'm open to all suggestions, whether you agree with me or not, disagree. Please leave a comment. I'm open to probably educating myself, maybe fact checking me. Thanks for watching, guys. Stay tuned next. Thank you. Bye bye.